Yeah, Dell numbers just hitting the wire in the last 30 seconds or so. Looking at their numbers for the second quarter, it looks like infrastructure solutions net revenue at 16.8. Looks like second quarter adjusted EPS slightly ahead of a $2.30 estimate with $2.32. And it looks like operating income on an adjusted basis for that quarter, maybe slightly below, if not considered in line with the expectation. $2.28 billion, a 2.3 estimate's what I'm seeing. Looks like kind of a back and forth battle here. They do provide some both current quarter and full year updates to their guidance. For their current quarter, they provide $26.5 to $27.5 billion. That would be a beat for where the street was at $26.46 billion for a midpoint. So the low end of their guidance range clearing the street midpoint estimate. When you look at their current quarter EPS guidance, not the same story, almost the inverse story. They offer $2.35 to $2.55. The street midpoint estimate at $2.54. So up at their midpoint. However, on their full year, they do raise from $9.40 per share to $9.55. And they say through the first half of their fiscal year 2026, they have shipped $10 billion of AI solutions. So big numbers, not only at Nvidia, but at companies like Dell as well.
Okay, and we are seeing Dell, after an initial pop, tracking lower by about 3% in the after-hours performance here off the back of what we're hearing. Anything stand out to you on this, Kevin?
Where they're raising their AI shipment expectations for the fiscal year as well by around $5 billion. Compared to what they had actually had previously. It's a little bit slower or deceleration from what they've seen as far as the growth from last quarter. But I mean, overall, it was a good report. I think beating both top, bottom line, maybe some mixed numbers there when you're looking at the full year guide. This company has had a very high bar, and it does have the exposure to artificial intelligence. They continue to talk about this refresh cycle for PCs, and we have to be mindful of that. AI is definitely going to be a story for Dell, but PCs are still kind of one of the cornerstones of their business, and they continue to expect a refresh cycle pretty much at the latter half of this year going into next year. They said the same thing this time last year, and it just has not happened. So that's also kind of a wait and see type of event here. But we are seeing it kind of gyrate. I think once again, it's mixed. The numbers that you wanted to see actually show growth, they did. It's just they might be a little bit more conservative when it comes to the outlook, especially on the margin basis.
Yeah, I mean, the big question was whether it would get back on track with those earnings. Okay, we also have Marvell hitting the wires as well, Alex. Just run us through those numbers as far as what you're seeing there.
Yeah, initial reaction looks to be lower by about 10% for shares as well, maybe just under that mark. So much of the same that we just talked about with Dell in terms of still showing growth, but perhaps a decelerating story. However, if you look at the numbers, though, they're mostly in line. They're exactly in line for second quarter on both revenue, just over $2 billion, which is where the expectation was, and adjusted EPS at 67 cents. However, while their third quarter or current quarter adjusted EPS maybe just clears the bar at 74 cents versus street estimate of 73 that I'm seeing, it doesn't look that that's the case for revenue. They guide to $2.06 billion, which would be also sequentially relatively flat quarter over quarter. The street was looking for something closer to $2.11 billion. So disappointing revenue guide for Marvell, as the story really does seem to be slowing down despite the fact that they do have some stuff that's going really, really well in the case of their AI-related solutions, but they do have areas like automotive and industrial that are struggling just a bit, and their data center revenue, which of course their biggest piece, is really starting to slow down in terms of the growth rate.
Yeah, I mean, we've got that data center update from Nvidia, and what we've seen certainly as far as some of these tech companies is that if you have that exposure to the industrials and the autos, that has been a bit of a struggle point. Just wondering how you're seeing things, Kevin, given that everything's been really about the AI story today.
They do have exposure in several different businesses, and if you're kind of looking at the trends on networking, that has been showing a lot of strength across multiple companies over the last week or so when we're looking at earnings. But you kind of look at their guidance moving forward, the adjusted EPS guidance for Q3, I would say that's actually kind of a wide range that they provided for that guide compared to what I've seen in the past. So that might be a little bit concerning here. And then also margins is for the most part kind of stagnant if you're looking at non-GAAP margins. So Street, once again, does not like this print. Let's see what the reaction is going to be. You know, there's some companies just like CrowdStrike yesterday where they can turn this around on a conference call and kind of really explain themselves. Are they actually seeing a little bit of slowing in certain pockets, or is there also a regulatory hurdle for this company as well? We'll get those details, and if it's something that can be explained away, this could be one of those stocks that actually does reverse fairly quickly here. But just looking at the price action as well as the numbers, I would say nothing really surprised the Street to the upside. Maybe a little bit more, once again, cautious outlook when you're looking at the adjusted earnings per share and margins at this point.
Okay, well, taking a leg lower by about 8% in after hours off the back of the numbers. As you say, let's take a look at what they say in that call. Thank you so much, Alex Coffey and Kevin Green, for keeping us across those stories.